Started. Okay, officially, good morning, everyone. Thank you for being here today and for making the time. Today, we have we have three presenters who are going to share with us different options of loans and community-based, that they are community-based, that usually runs at a lower rates than commercial banks. And we have three different organizations joining us: Action Opportunity Fund, Inclusive Action, and LISC. This is the little agenda I prepared for us. It's just each one of them are going to be presenting different programs and different loans options that they have. And as you can see here, we're gonna start with Lindsay Sean. I'm gonna pass it to Lindsay, and then we can go in that order so they can present and introduce themselves, and then we can just go ahead and get started. Lindsay, I pass it to you.
Okay, great. Thank you. Let me try to share my screen here.
Oh, hold on. I stopped sharing.
Okay, there we go. Well, hello, everybody. It's nice to see all of you. My name is Lindsay Chung. I am a program manager and a senior business credit advisor here at Action Opportunity Fund. Been with the organization for about 7 years. I'm really passionate about helping small businesses get access to capital and educational resources. So I'm just going to give you a little bit of overview of our organization, and then we have one loan program and a grant program that we'll cover today, and then we'll have plenty of time for questions once we're done here. So Action Opportunity Fund is the nation's largest nonprofit CDFI microlender. We've been operating for about 30 years, and we're focused on helping underserved entrepreneurs get access to affordable capital and educational resources. We do this in a number of different ways. One is through our loan program, which I'll talk about later, but we also have a series of other programs, including coaching and webinars and different educational programming. So this kind of gives you an idea about our working capital loan. Our loans range from $5,000 to $250,000. Our terms are from 12 to 60 months, and our interest rates in California are about 8.99 to 18%. We do have no prepayment penalty. Our main requirements are that you have 1 year in operation, you have a minimum annual revenue of $50,000, and a minimum FICO score of 570. We have a very simple and easy process. You just go onto our website by clicking that link below, and I think we'll be sharing this deck, so you can always get it off that. Or if you go onto our website, there's a big Apply Now button on the top right corner. You need to fill out about a 20 to 30-minute application. We do a soft pull of your credit, and if you're eligible for a loan with us, then you receive about 3 different options. Typically, you can choose between the lowest interest rate or the highest and the lowest payment. And once you decide to take an offer, we'll ask you to upload documents. So the documents that we require is last year's tax returns, bank statements for the last 3 months, and then a color copy of your ID. Once all of that's uploaded, it goes into the full underwriting process, and generally takes about 7 to 10 business days to be funded. We lend in California. There are a few states that we don't lend in, but all of you guys are in California, so that's relevant. One thing also to mention on loans that's very specific to California, because you guys are food businesses, is we do a lot of mobile food loans. So if you want to learn more about that, our max for that program is also $250, and we work with a number of different manufacturers throughout California to help get your food truck funded. For this program, we don't have any specific time and business requirements. We do want to see that, you've had some success in selling your food, but we can work on projections for that program and help you get your first food truck. So if you're interested in that, I'll include my information at the end, and I can connect you to our loan consultant that just focuses on mobile food, and he can kind of guide you through that process. Another thing that we do pretty regularly is we offer a number of different grant programs. So right now we have Fast Break for Small Business. This is a $10,000 grant, and then you also get $500 in free LegalZoom services. We will be giving it to 150. We've actually already selected 90 people, but we do have 2 more rounds coming up for Fast Break, and so you still have an opportunity to get this grant. You just got to get your application in soon. Our deadline is September 13th at 8 p.m. We ask for the same documents for this program as we do our loan program, so you will need some way to verify that you've been in operation. So if you've been in operation for over 3 months, but less than 12 months, we'll need something to verify that you're in operations, whether that's your articles of incorporation or professional license, or even your EIN certificate, things of that sort to verify that you're in operation. Over 12 months, we need your tax returns, and we need the last 3 months of bank statements and a color copy of your ID. You can apply at aofund.org/fastbreak. And that application also takes about 20 to 30 minutes. Here is the eligibility requirements. So if you are a startup business, we do have free LegalZoom services available to you if you've been in operation for less than 3 months, or you just have a business idea. For businesses in operation for over 3 months, we require that you're in the United States, make less than $1 million, not one of our prohibited industries, which likely if you're in this program, you're not in one of our prohibited industries. This kind of gives the document requirements that we just talked about. So that's all I have to cover here. This is just links to our website. Down here is also my email address. I am a coach with us, so if you do have any questions about access to capital or financial management, I'm happy to help in those areas also. So go ahead and stop sharing my screen, and we can open it up for questions if anybody has any questions.
I do have a question. Are there any other requirements for the grant when it comes as a business and beside of the legal documents that they have to present? Or those are all of the requirements?
Yeah, so Fast Break, it's really easy. It's just that you meet those eligibility requirements and you upload the right documents. That being said, many people who are selected don't do the right documents. So making sure that you just check and double check your documents is always important. For that program, we just randomly select people. So we pull people's name out of a hat type of thing, except we use a number random generator to do it. And then we check if they meet all the eligibility requirements. And if they do, then they go ahead and get that grant. We do have other grants where, you may need to be in a specific industry, or we have different requirements for each of our programs. So, feel free to follow us on social media. I know CLA shares a lot of the programs that we have. So just keep an eye out for those type of programs.
Thank you, Lindsay. I do have another question. So let's say that I get selected. I apply, I get selected, I get $10,000. What happens after I have been selected and I'm about to get the $10,000? Is there any how does the process look like after that?
Yeah, so that's a good question. It's really simple. So we actually collect all your payment information up front. So you get an email. LegalZoom, if you want, is promoting your name on their social media when you receive the grant. And then we send out an email saying, hey, you got the grant, and then it's deposited into your account in 2 weeks.
Amazing. Thank you. Any other questions?
I do have a question about the legal Zoom, the $500. Is that so businesses have to be brand new or an idea? They can't be existing in order to apply for the legal Zoom assistance?
So if you if you've been in operation for over 3 months and you receive the grant, you also get $500 in legal Zoom services. If you just have an idea and are in operation for less than 3 months, then you're just eligible for the legal Zoom services worth up to $500.
Oh, okay. So more than 3 months, then you could do the 500. Because I was thinking of businesses that have been around for more than 3 months, but not yet process paperwork, just sole prop.
Oh, okay. Sole props are totally fine as long as you have the documents to show that. And then for if they've been in operation for over a year, for business taxes, we need their 1040 with their Schedule C and they're eligible.
Okay. Thank you.
Yeah, thank you.
Any other questions? Thank you so much, Lindsay. I'll pass it to you, Alice.
Thank you. Hi everyone. I'm going to share my screen as well. 1 second. Can you all see the presentation? Awesome. Great. Hi again, everyone. Thanks for having us here. My name is Alyssa. I work at Inclusive Action for the city, and I'm our senior underwriter here at Inclusive Action. So any loan applications that go through our program, someone from our underwriting team will review and process. I'm going to share a little bit more about Inclusive Action. We are a organization that's based here in Los Angeles, based in Boyle Heights on the east side of LA. Our mission is we focus on serving underinvested communities and building thriving local economies by improving access to transformative capital and advancing policy through research and community-driven advocacy. So what that means is we connect business owners to affordable capital, but we also spend time learning from business owners to see what they would like to change in their community and how we can help them do that. So we also have a policy team that works on introducing new laws and working with elected officials in order to make Los Angeles a better space for business owners. Today I'm going to be sharing about our SAMIA fund, which is our lending program. We offer low interest loans as well as offering free business coaching for our clients throughout the term of their loan. So what that looks like is for a lot of folks, when they come to us for the first time, they might need a little bit of support getting loan ready or even completing the application. So that's something that we and our business coaching team is able to do before any loan applications get complete or submitted or folks become borrowers. For other businesses, maybe folks that are just starting out or want to plan a little bit further about their business trajectory, we also have a great network of service providers that we can refer entrepreneurs out to. Once folks make it to our underwriting stage, they can expect to have accessible and flexible terms on the loans and unique loan products that are designed specifically by feedback that we're receiving from our existing clients and other business owners in our community. Once folks become borrowers, they have access to free business coaching during the term of their loan. This means that they're assigned a business coach that they can rely on for any support, whether it be filing your taxes, creating a strategy to grow your business, utilizing social media for the first time, whatever it might be. We also have a schedule of group workshops at Inclusive Action. We currently have around 2 workshops a month, and they span across different topics, including accounting, using online payment methods, training for more professional catering opportunities. They really range across all topics. Yes, and as a CDFI, which is a community development financial institution, we also have a great network of other organizations that we work with. So we're able to connect folks to other services they might need, but also if in the future they outgrow our lending products, we're able to connect folks to other lenders that might provide bigger loans. So let me share a little bit more about our clients. About 50% of our clients are currently street vendors or home-based businesses. So we have a lot of experience working with folks who operate cash-based businesses for the most part, and that also have very small businesses. So what that means is they might be looking for a smaller loan to start with, and then as they grow their credit, might look for a bigger loan later on. About 60% of our portfolio are women entrepreneurs or women-owned businesses, and about 97% of our portfolio are BIPOC entrepreneurs. This other figure is really important since a lot of lenders don't serve ITIN holders or folks that do not have Social Security numbers. About 60% of our portfolio right now are non-Social Security holders. So if we're really here to support anyone who's starting to build their credit and is looking for some affordable capital. To tell you a little bit more about our requirements, we do not have a minimum FICO score. So if you or someone who's applying is in the position where they've never had a loan before, so maybe they don't have a credit history, or they've had not so great experiences with credit accounts, we're definitely open to reviewing all types of applications. Again, as I just mentioned, we don't have an ITIN or a Social Security requirement for our lending. We also don't require bank accounts for our loan applications. We know that a lot of folks operate for the most part in cash. And so we want to make sure to open up the application to as many entrepreneurs as possible. Let me tell you more about our specific loan products. We currently have 3 available. First is our SEMIA loan. This loan is from, it might be easier to show you this. Our SEMIA loan, this loan is from $3,000 to $35,000. It has an 8% fixed rate, and the term would be from 1 year to 5 years. This loan can be used is the most flexible of our products and can be used for any business use for the most part. Working capital, equipment purchases, and inventory tend to be what folks use this loan for the most. We also have our Tierra loan available, which is a loan between $5,000 and $30,000. It is at a 3% fixed rate, which is quite low, especially with the market out there. This loan is also from 1 year to 5 years, but can only be used for equipment, inventory, or technology purposes. And then another option that a lot of folks have found is appropriate for their business is our RAISES loan, which is a small loan. It's between $500 to $2,500 at a 5% rate. This is a perfect fit for folks who are just starting to establish their credit or maybe just starting their business. We don't require any time in business for this loan. Yes, for all of our applicants, businesses must generate less than $750,000 in gross sales per year, and businesses must operate within LA County. We do not require any sort of down payment, and payments are made on a monthly basis, once a month. We don't have any prepayment penalties, and some of the loans might have a fee of between 2 to 3% dependent on some factors that we review during underwriting, especially if we decide to guarantee the loan. Yes. Our business coaches are available to provide support with the loan application itself. But here are some documents that are required. We require you to fill out an application, and if you have a co-owner of your business, they would have to fill out an application as well. We also require an up-to-date valid photo ID. We ask for personal and business federal tax returns. These are not required, but would definitely help secure a bigger loan. And then we do ask for business related receipts. These are required. We want to make sure that folks are actively in business, as well as any logs of business income. Yes. Additionally, we'll ask for bank statements if the business owner has them. We do require some sort of rent or mortgage receipts to make sure that folks are on time with their essential expenses in their household, as well as personal utility bills and business permits if those are available. Yes, and that's it for my presentation. Here I've sent. This will be shared with you afterward, but here's my contact information, my email, and my phone number. Again, my name is Alyssa. If you're interested in a loan, I can connect with you and we can talk about the next steps in applying for a loan with Inclusive Action.
Thank you. So,
yeah. Are there any questions or comments to get started with?
I actually have a question. I was waiting to see if anybody has another question. So at some point you mentioned that there are different factors that you guys take into consideration when it comes on the to determine the quantity of the loan. What are some of those factors? Can you share? I know it will change case by case, but what are the things that you guys look at to determine the quantity of it?
Yes, so I would say the main factor is how much we ask you, and we also do an assessment of how much the business owner can afford on a monthly basis. So if you're looking to make an investment in your business, knowing what that investment looks like. For example, I currently am underwriting a business who's looking to buy a new fridge. So we know that the fridge is going to cost, for example, $3,000. It's a commercial fridge. So the next question is, how much can this business owner afford on a monthly basis? So if we look at all of your expenses, current expenses, is there a little bit of wiggle room where we can set a comfortable monthly payment? And that definitely helps inform the total term of the loan, so the amounts of months that you'll be repaying for, and then also how much we can lend to you. Our maximum term is for 5 years. So we definitely will have folks, most folks will be paying for less than that. But again, there's no prepayment penalties. So we'll try and give folks a comfortable monthly payment, or maybe set their monthly payment a little bit lower than what they express is comfortable, just in case. And then if folks do really well in their business, or have a high season in their business, they can pay us a little bit more in principal if they would like to save on that interest.
Perfect, thank you. And a follow-up question came up with that, just to clarify some. There's I know the different type of products that you have different rates when it comes to interest, and there is an annual rate as well. Let's say I get a loan for $3,000, using the same example, at a 3% rate, and I've got it for 3 years. Those 3 years, that the 3% is gonna stay up to 3 years, regardless of how my business is doing, even if it's doing well or whatever, it's not going to change. I'm understanding correctly that?
Yes, that's correct. So all of the terms that are that are offered at the very start, those stay exactly the same.
Okay.
If your business is doing way better, that's awesome. And we'd love to hear it. But we won't be we don't change any terms based on that. What we do offer and what a lot of folks end up doing is they'll have a smaller loan with us. Their business expands during their term of their loan, and they decide, okay, I'm ready to refinance my existing loan. And I'm ready to take on something a little bit bigger. And so that's what our business coaching team supports with. Yes.
Thank you so much.
Of course.
Does anybody has any other questions? Thank you, Alyssa. We'll
thank
pass
you.
it on to Diana.
Alrighty. Let me share my screen first and see if it works. And if not, then I sent you the presentation. Can you see my screen? Okay. So you can see the ABC Asset Building for Communities of Color. Awesome. So I'm going to be talking about one of our programs that we're leading here at LISC LA. It's the Asset Building for Communities of Color, funded and provided by Wells Fargo. So this is our LISC LA ABC team. It's myself, Diana Reyes. I'm a program officer along with my colleagues, Sabin and Christian, who are the three of us are working on the initiative, the program. Today's agenda, we'll be going through the program overview, the 2 products, how to apply, and then we'll leave some Q&A time. So who is LISC LA? LISC LA is one of the 38 local offices, Local Initiative Support Corporation, and we're a national nonprofit organization, and we support community development in cities and rural areas throughout the country. Our ABC program is the Asset Building for Communities of Color that was funded from the Wells Fargo LISC LA program that was created to help small businesses operating in our LA County communities. And what we want to do is help these businesses grow. We want to help them build wealth, avoid displacement, and create and maintain jobs within our communities. This is one of our most recent recipients, Carla's Fresh Market. I'm not sure if any of you guys are familiar with Highland Park area, but this is a wonderful grocery store. It's and what I love is like local farmers, local food makers. That's the type of products that she has. She has a coffee place, I mean, wine selection, delicious fresh food. So if you guys are in the Highland Park area, we were able to help her with some growth capital so she can build out this beautiful grocery store that now is, I mean, so many people are going and they love it. So that's one of our ABC recipients for growth capital. And then our second one is Sadie and Sage, and this one was an acquisition growth capital. So we were able to help Sadie and Sage move into a bigger space and own and purchase their own commercial building. So no longer renting, no longer at risk of being displaced. They are now owners of their own space in the LA area. Alrighty, and the 2 products that we're going to be talking about today is the growth capital and the acquisition capital. The eligibility criteria, and this is going to be for both products. We want to make sure that the businesses that are applying are serving LMI areas, so low to moderate income communities. They have to be a for-profit entity that is based in LA County, and we unfortunately don't lend out to sole props. It has to be a corporation, an LLC, or a general partnership. And for nonprofits are eligible actually for the acquisition capital, but only the acquisition capital. For the growth capital, it has to be a for-profit entity. businesses have to have been in operations for at least 2 years and can show at least 2 years of tax return. Now for a growth capital product, this is any business that is looking to purchase equipment, machinery, update their technology, buy new technology. If they want to do some leasehold improvements, we are able to help them up to $100,000 of leasehold improvements. And this growth capital can go anywhere from $50,000 to $250,000, and it's at a 0% interest rate. Along with the capital, we do provide technical assistance up to 30 hours throughout the life of the loan. Our financing terms for this one is there is no collateral. Our repayment terms are very flexible, the payments, and the term is for 60 months. The way that it works is we do defer the payments for the first year. So when you do get approved, we disperse the money, sometimes in different disbursements, either 1 or 2. And the first year, we don't require any payments. So we defer the payments. And then second year, we start, collecting payments. So we amortize the loan in 48 months. It is a 60-month term, but we amortize the payments in 48 months. And then still continues at 0% interest, and there is a 3% closing cost, 3% of the financing that you get approved for, which is payable at closing. Doesn't have to come out of pocket. It does get, subtracted from whatever the loan amount was that was approved. The evaluation process for the growth capital, you have to show us business history. We look at the business history. We want to see the business plan. What plans do you have for your business? Expanding, growing, hiring, all that. We want to see it. We look at revenue projections. We look at historicals, and also what are you projecting? What kind of contracts are coming in? What work do you have for the future? And how do you see your business growing in sales? So sometimes if historically is not doing too well, but you do have some great projects coming, we can look at that and we can loan based off of that. We look at the business location, we look at the community impact. We want to make sure that you are providing a benefit to those areas and that you are creating jobs within those communities. We look at the neighborhood characteristics. We want to see what is the unemployment rate, what is the poverty rate, because we want to lend to those communities. We want to lend to those businesses and those communities that can provide those impacts. And preferably, we want to see businesses that are in areas that are historically impacted by racial, wealth, and health opportunity gaps. This is a process map of what the application looks like. The process, it goes from intake to info collection to underwriting to disbursement. And it can go anywhere from 3, I've seen it as, as fast as 3 months to maybe 5 months. And it all depends on how prepared the business is when they do their submission. Have they provided a lot of documentation that we require? The more documents that we receive in the beginning, the faster we can move you through our technical assistance providers, through our underwriting, and then to our committee to make a final decision so we can send out those disbursements. There are a few people or businesses that do need a little bit more technical assistance, and those might be a little bit longer because they're working one-on-one with their TAs so they can work on their projections, on their business plan. And yeah, the more time that you take working with the TAs and getting those documents prepared, the longer it's going to take to close that loan. But the more prepared you are, the faster it takes to close that loan. But yeah, this is a really quick 4-step process. That might not be that quick. It all depends. But we always work with the businesses to make it as fast as possible because we know they need that money. Now we're going to move on to the acquisition capital. And this is for any businesses also been around for 2 years or more, but they are in a position and ready to make a big purchase, which is purchasing a commercial building. So no longer you're renting, now you're going to be an owner of your own space. So we are able to help with the down payment assistance part of up to 20% of the purchase price for the sale of a commercial or mixed-use property. So even if you're looking to buy a property that you're not going to utilize the entire building for your business operations, but at least 51% of it is going to be your business operation, we'll be able to help with that, because there is a lot of businesses that might use the bottom part of it for their business. And then if they want to lease out the top part and then collect rental income from that, that's perfect. We're able to help with that as long as it's, 50 or 51% is being utilized by the actual business operation. So this acquisition capital can go from anywhere from 100,000 to up to 500,000. So it's 20% of the purchase price, but the most that we will lend out is 500,000. Also 0% interest, and eligible is just, for the purchase of a property that's going to be used for your business or a portion of your business. Financing terms, same thing, no collateral required. Payments are deferred if certain predetermined conditions have been met. This one is a little bit different than the growth capital, because growth capital, we do start collecting payments, after the first year. The acquisition capital, this one can actually be forgiven, the entire amount. So what we're looking for is businesses that are gonna now purchase a property in LMI areas, that you're gonna create a certain amount of jobs, and we're gonna ask, like, how many jobs do you anticipate? How many jobs do you anticipate opening up for the community? We don't require, like, if you say, oh, we're in the next 5 years, we're gonna, get like open up 10 positions, and if you only open up 8, we're not going to hold you to it. It's at least you're providing some jobs. If you tell us, we're going to go into a community that there's no healthy food, like Carlos Fresh Market, but now we're going to bring health into the community. Oh, okay, perfect. So we want to make sure, like, those predetermined conditions are being met throughout the 5 years. And what we do is every year we evaluate the loan. And if those are being met, every year we forgive 20% of whatever the entire amount was. So the goal is that by the end of the 5 years, we've forgiven the entire amount, whether that's 100, 200, or 500,000. We also ask that you stay in the building for the 5 years of the term of the loan. As long as that's not being sold, you don't lose the building, and the predetermined conditions have been met. Yep, the entire amount might be forgiven after the 5 years. Also, a 3% closing cost payable at closing. Same thing, it doesn't come out of pocket. It's something that's subtracted from the amount. And the disbursement is very different than the growth capital that can be in different disbursements. This one actually gets sent out as a lump sum at closing, because it is a purchase of a property, so it does get dispersed to the escrow company. Evaluation process very similar to the growth capital. We look at business history, we look at the projections for the subject property. What is the location? What's the impact? How many jobs are you creating? Is a historically underinvested community? We look at the unemployment rate, poverty rate. We want to see a property in an area that's historically impacted by these factors, which, any opportunity gaps, wealth, racial, and health. And one more eligibility criteria for this specific acquisition capital is you have to be referred by a LISC or approved referral partner. And a lot of people are like, who are those referral partners? Who are our TAs? And if you don't know it, that's fine. You can still apply for it, and then we will refer you to them so you can work with them. A lot of people that have come to us wanting to apply for acquisition capital, it is their first commercial purchase. So it's a brand new process. And then, it's a new process, kind of like buying a house. So a lot of the times it's perfect aligning you with a TA that's experienced and knowledgeable within this area, because at the end of the day, you're making such a huge purchase. You want to make sure you know what you're getting yourself into. So we'll connect you with these referral partners. And then second, we want to make sure that you have been approved for the additional financing. So if we're looking at a property of $1 million, we're going to give the 20%, 200,000, but then we still need you to go and look for the 800,000. At times, LISC is able to help with the difference, but at times we can't. We just don't have the capacity. So we do ask that you go, find yourself either with another CDFI, another lender, but we do need that approval of the remaining of the commercial or acquisition price in order for us to be able to approve the RG, which is a 20%. And then this process, same thing, 4-step process: intake, info collection, underwriting, and disbursements. The only difference is that this one are TAs. We have one specific TA that works with you throughout the entire process, more in the beginning, because they're able to help you with the purchase and sales agreement, like what's on there, to make sure that's to your benefit and not only to the seller's benefit. We also start working with our national team very closely, one-on-one, to make sure that everything, to make sure that the process is moving smoothly. This one, very similar. If like buying a house, it can take a little longer because at the end of the day, we're making a purchase and we have to get third-party reports, because we want to make sure that the building that you're going into is a place that's not falling. In the outside might look pretty, but you don't know what's going on the inside. It might have molds. You don't know. So we want to make sure that you're going into a building that's going to, stay still for the next 5 years at least. So yeah, very similar process: intake, info collection, underwriting, and disbursement, but might take a little bit longer, maybe, anywhere up to 6 months. Now, how to apply. So in order for you to apply, we have our LISC, la.abc.com, that you go into our webpage. And I can put the link on the chat after I'm done. So you guys have the link. Once you go onto our page, this is what you're going to see: asset building for communities of color. It's going to have these tabs, so you'll be able to see the goals, the products, the TA providers that we work with, and FAQ for any other additional questions. We have the 3 products here. The 2 products, the growth capital and the acquisition capital. We have some of the recipients, and they talk about their experience and their story and how we were able to help them with their businesses. This is how it's going to look. It's going to say growth capital product, the eligibility criteria, who's eligible for this product, which we went through a little bit before. How to apply, it has the fact sheet, and then you're going to see the intake form. When you click on the intake form, it takes you directly into the application, and it takes about 30 minutes, maybe, if you do it in one sitting. You can also save it and then come back to it if you don't have the 30 minutes to just sit there. And also it's going to ask you to upload some documents. So a lot of the times people do come back because they want to collect those documents. But yeah, that's the intake form. The intake form is also in Spanish for anybody that wants to do it in Spanish. And then we also have TAs that speak Spanish, which is great because we do have some applicants that don't speak English, or that just prefer to speak with somebody that's, speaks Spanish because they're more comfortable with it, and that's fine. This is what it's going to look like: LISC ABC Growth Capital Request for Information Part 1, Round 2. And then these are some of the documents that you are going to be expected to provide, and not initially, but throughout the entire process. So in order for the first part of it, we're going to need the 2 years tax returns, year-to-date financials, so profit and loss, income statement, balance sheet. We also ask for 2023 financials, 22. We asked for 2022 in the past, not really so much, because now we're at just 2023 and 2024. We want to see what kind of debt you have, because we don't want to give you additional debt if you already have so much debt. If you have an EIDL loan or a PPP loan, the status of that, tax returns on your personal end, a resume or a bio, entity documents, 3 months of most recent bank statements, your PFS, and a lease agreement if you are leasing a space. And then once you're working with the underwriter, then he'll work with you to collect the remaining of the documents, but it's like a budget, line item budget, to see like what is it that you're going to use the funds for. A job creation impact tracker, so we want to see how many jobs are you going to be creating within the community, any contracts that you have, a business plan, any receivables if you do have them, a letter of support from our TA, which you'll be working with the TA and they'll provide that. and a 5-year projected cash flow. And that's something that the TA is going to help you fill out. So most of this, it seems like, whoa, that's a lot of documents. And it is, but that's why we have a TA working with you throughout the entire process to help you with it, hold your hands, and then get you ready to go to underwriting. So by the time you're in underwriting, it's little questions here and there, but we're pretty much set. All right. So this is our email, abclosangeles@lisc.org. And then I'll also put my personal email on the chat along with the application. And yeah, if you guys have any questions, I'm open to any questions at the moment.
Thank you, Diana. There is a question in the chat. It's not in particular about anything that you spoke, but maybe you can help answer. If not, I think I know the answer, but I'm gonna give it to you first. So Mercedes wants to know, how does community lending program decide what communities are low income or historically the same franchise? Is it by the zip code?
It's by zip code, yes. So we have through CDFI, there is a we have a web page through CDFI, and we put the address, and then it tells us when it's a low to moderate. It literally says this is a moderate family income, low and poverty rate. It tells us it shades it red if it's, you know, one of those like LMI areas, and that's how we determine it. And I can put it on the chat too, so everybody can look at it, maybe put their address and see, hey, am I in an LMI area? And sometimes I've advocated for some businesses that, because you know what, gentrification, a lot of these neighborhoods are not LMI anymore, but historically have been. So what I do is I go back to 2020 and or maybe 2019, and if they were historically in an LMI area but now not so much, I make a case for it, like, hey, you know, they were here, you know, for a long time, and it's not their fault that it's no longer an LMI area. Also, they are providing jobs to people that are coming from LMI areas. So, I mean, but if it's in like Beverly Hills, then yeah, we're not, you know, or like areas that are really not historically underserved, then we really can't build a case. But if it's in an area that was historically underserved, then yeah, there's a case to build around it. If maybe it's surrounded by LMI areas, there's a case to build around it. So I never discourage anyone from applying, just apply. And if we can't do nothing about it, then we'll let you know. You know, we tried, but yeah, just apply and then see what happens.
Thank you. I'm gonna play the devil's advocate here, and I'm gonna ask you a follow-up question about it. So let's say that I'm gonna use Beverly Hills as an example because you use it. But let's say that somehow I have a business in Beverly Hills. I don't know, I got a good deal. Somehow I have a business, but me personally as a business owner, I don't qualify as well, I do qualify as a low to moderate income person because of the money I'm making. You know, it's a brand new business, blah, blah, blah. I just got lucky and got a location in Beverly Hills. Will you be able to build up a case on that kind of situation? Have you seen something like that?
Yeah, we actually did. I have a gentleman that he has his practice, and he's an attorney, and he has his practice in Beverly Hills, and most of his employees come from an LMI area, Panorama City, you know, Canoga Park. They drive all the way over there. We built a case, and we were able to give him very little. I mean, we were going to be able to give him very little, but at the end he was like, no, I want it more. So what he decided to do is like, let me find a space, because it was kind of far for his employees. So he said, let me find a space that's closer in an LMI area, closer to my team. And at that point, we're like, yeah, perfect. You know, we're going to be able to help you. But it gets very tough if you're in an area like Beverly Hills, because then at that point, they start asking, well, if he can afford Beverly Hills, why does he need a CDFI to give him some money? He can go to a bank. Because at the end of the day, who we're trying to help is businesses that can't go to a bank and get a loan. So non-bankable, we want to help you become bankable, but at this point in your business stage, you can't walk into a Wells Fargo or a Bank of America and get a loan. So that's where we come into play. So if you're in Beverly Hills and you can afford that kind of rent, I think you'll be fine to go to, one of those big banks.
Thank you. Yeah, so Mercedes expanded a little bit more. She said that that example fits her because they're located in the zip code 90036, which doesn't historically define as poverty, but they are minority owned, and they do serve a high population of the homeless people. So in that case, how do you? I know that you kind of like expanded it a little bit, but is there additional anything else that you think it would change in her case? Given it's not Beverly Hills.
Yeah, it's not very. If it's like close by an area that's historically defined, as a poverty, and if you're serving a high population of homeless people, that kind of fits our charitability, because at the end of the day, we're a nonprofit and we want to help businesses that are helping community, especially homeless. So I'm sure we can build a case. There has to be at least what they say 2 charitability causes. I mean, serving the homeless population is definitely one of them. And we'll find something else. Like, who are you employing? But yeah, I don't know what the zip code 90036 is. Maybe I would need the entire address, or you can put the address on that CDFI fund mapping tool that I gave you.
It falls on the Miracle Mile.
Yeah, but I wouldn't discourage you from applying. I would say go for it. And then if there is anything that we can work around it, trust me, Sabin and I will find it.
Thank you. I do. And then when you say like what's the question I want to ask? So they're serving homeless people. Do they need to prove that they're serving homeless people? Like what kind of documentation they will need in order to say like, hey, I'm serving the homeless population?
Yeah, we'll
Do
look
they
at
have
the
to prove it?
So that's why it's very important to have the business plan, a really good business plan, because that's where we'll see, well, how are you serving the homeless population? What are you doing for them? What kind of services are you providing for them? And that's any contracts that you have where it says, this is what we're providing. We're working with the county, we're working with the state, we're working with local communities, other nonprofits. So yeah, there's going to be some documents and some proof that we're going to request to see how is it that you are serving the homeless population. For example, we have some nonprofits that help transitional homeless youth going from like 18 to, I believe, 24 or 26. They have housing for them, and they have contracts with other nonprofits, some churches, and so they're able to collect that and see these are the amount of students or youth that they are helping and taking off of the streets.
Thank you.
Yeah.
Mercedes, does that answer your question? Yes, enough.
Sorry, guys, my phone was stuck. Yes, it does answer the question. I'm always frightened to do some of these things because, where we are is 10 minutes, maybe 15 minutes from Beverly Hills, because we sit in between Fairfax and La Brea, so there's a lot of, community grants and stuff that we shy away from because historically where we're located, it's not defined as a location that they feel would benefit from from the services.
Yeah, I would say go for it and apply. The worst that can happen is they say no, but hey, at least you've applied, you tried, and maybe they say yes.
Exactly.
Okay, thank you.
Yeah.
Does anybody else have any other questions either for Diana or Alyssa?
Hi, I do for Diana. So would you guys be able to provide kind of help before an application process, like, to be able to gather all the documents kind of beforehand, or would we have to apply first for either of the program?
You would have to apply first. Let me see. Have I had somebody? Yeah, you would have to apply first because we wouldn't have a way to connect you with it. They're part of the program. So they bill us if they're helping somebody once they've applied.
Okay, thank you. I only ask because I'm not really in a position where I would love to have like my own commercial space. That's like, the LA dream. We don't want to rent anymore anywhere. But I know I'm not quite there yet. So I just kind of wanted to have like some prep, in the meantime, especially since you said it would take like 6 months, more or less. I was like, maybe that would be enough time to kind of gather all the stuff together that I would need. And also keep, providing business in the meantime.
Well, if you want to send me an email, I put my email there, and give me more information on the business, and then I can connect you with somebody, one of our TAs.
Okay, thank you.
Any other questions?
Yeah, so here's my email. You guys can email me directly. I can send you the application or my Calendly if you guys have any other questions.
Thank you, Diana. So if nobody has any other questions for Diana or Alyssa, I'm just gonna let them go.
Thank you. Bye-bye.
Bye.
Thank
Thank you so
you.
much, Diana and
Of course.
Alyssa. And ladies, I need just a second of your time. Let me just stop recording.